It's time now for business. Let's say hello to Kate Moody. So, Kate, if I understand correctly, it's bad out there, but not as bad as we first thought.
That's exactly right, Francois. You've summed up the state of the global economy perfectly there. The coronavirus pandemic and lockdowns have really thrust the global economy into the deepest recession in decades. But the Organization for Economic Cooperation and Development has now lifted its outlook as the year comes to a close. Back in June, it was predicting that the economy around the world would shrink around 6%. Now it's scaled that back to a 4.2% contraction. It's still huge, but not as bad as initially feared. China is on track to be the only major economy that actually grows this year. The U.S. is forecast to shrink around 3.7%, the Eurozone a 7.5% contraction. France and the UK are going to be among the worst affected economies. Now, among the reasons cited for this improvement, some progress towards a possible coronavirus vaccine, substantial government support for businesses and households around the world, and the relative success of lockdown restrictions in helping to slow the spread of the virus while allowing people to work. Now, there's still a lot of uncertainty out there. The OECD said that the damage done to vulnerable groups, in particular the millions of people that have been thrust into extreme poverty, could prove to be very long-lasting. But the OECD's Secretary General Angel Gurria did sound a note of unexpected optimism earlier. Take a listen.
For the first time since the pandemic hit in early 2020, we have hope. The good news about vaccines has instilled a degree of optimism and somehow dissipated the fog of uncertainty that had covered us all.
Well, they won't be dancing in the high streets of Britain after news, Kate, that two fixtures of the retail scene in the UK are going under.
Yeah, Debenhams is the UK's biggest department store chain and one of the oldest. Its first store dates back to 1778. On Tuesday, it said it would be permanently closing all of its 124 locations across the UK, and its 12,000 employees will likely all lose their jobs as those operations cease. Now, Debenhams has been in pretty deep financial trouble really since the financial crisis a decade ago. It fell into administration in April for the second time in less than a year, and it's been seeking a buyer since this summer. The last remaining bidder, JD Sports, has now withdrawn its interest, and analysts say that's probably the last straw. There's really no way back for Debenhams now. Now, this announcement came less than 24 hours after the company that's behind some of the biggest high street names in the country also collapsed. Arcadia is still seeking a buyer for some of its brands. It has 8 fashion brands that include Topshop and Dorothy Perkins, and a sale of even a few of those groups could save some of the 13,000 jobs at Arcadia. Now, these collapses will really visibly change the state of British retail. Many other brands, though, have also announced significant job cuts over the last year or so, even while staying afloat. Marks & Spencer, Sainsbury's, John Lewis have all announced thousands of layoffs in 2020 as they downsize their operations and try to switch to online sales. Data compiled by the Centre for Retail Research suggests that more than 158,000 retail jobs in the UK have been lost since the start of this year.
All right, first of the month, Kate, after a bullish November for investors, how are the markets doing?
Well, continuing those pretty strong gains around the world, stocks have generally been rising since those first announcements of a breakthrough on vaccine research that we saw just a few weeks ago. In London, the FTSE 100 closed up nearly 1.9%. The CAC 40 up about 1% here in Paris. Shares of the Italian bank UniCredit dropped 8% as its CEO announced plans to leave. New data showed that inflation across the Eurozone remains negative, and that's raised expectations that the European Central Bank could further increase its stimulus measures at its next policy meeting next week. Wall Street's also trending higher. The Dow Jones is up about 260 points this hour as it builds on its strongest month since 1987. The S&P 500 and Nasdaq have each hit new record highs in today's session as well. Shares of Zoom Video are bucking that positive trend. They've fallen nearly 14% despite reporting another strong quarter of earnings. And some analysts are warning that investors shouldn't get too far ahead of themselves. There are plenty of risks still out there as the number of coronavirus cases continues to rise in many countries around the world.
All right, many thanks for that, Kate Moody. We'll have the closing word on Wall Street later.